You know, I have to do the cough before I start. So anyway, it is March 19th. It's just a weekend review recap of pretty much last week. But really, the reason why I'm putting this video out is something I was working on. Every so often I like to sort of review, look back, and understand how I could have taken trades or even traded the sessions that I've been trading. And this obviously was Friday's session. Was a very quite electric. Um, and there was so many. I mean, when you look at it in hindsight, it looks obvious, but you want to be able to look at the chart and then figure out how you actually trade it. Um, and I've always struggled with sessions like this because apart from the this part of the session, everything else looks so ambiguous and not really clear. Um, like if I go bar by bar, and in fact, we can actually just kind of show you. I can actually go through everything from the start, just really quickly, based on how things kind of played out. As you can see, first bar, bear bar, and then you now have a bull bar underneath the moving average, and then you now have a doji. A doji, and actually they're all dojis, but it's an inside bar. So I remember when I saw this and I thought, will I actually take a trade here? The issue I had was, well, first of all, this is a great place to buy, not really a great place to buy. You're below the moving average. The seller's up here, but then you're coming from a very strong bull trend, right? Mind you, on the ETH, the electronic trading hours, we actually have a breakout. But at the time, I saw the breakout, but I didn't really consider it because I was thinking that it could be a trade. We could be in a trading range. I mean, right now we technically are in a trading range because we're at the lows here and we're below the highs. Okay, so next thing, bull bar closing on its high, breaks out of the inside bar. So this is consolidation breakout. We still haven't taken out this high and definitely below this high. I'm not sure I want to buy this, but we have support here anyway. And then look at what's happening. We have another doji pullback, if you want to call it, or a pause. Another bull bar, which is great. So it's almost like a second leg from these three bars. But then again, we have a tail up here. We haven't taken out that high. And we do take out this high, but now we have a wedge, right? At least 1, 2, and 3. What's going to happen now? We're at the high, testing this high, possible reversal coming up. Okay, bull bar closing on its high, so this is now breakout mode. We now have a bull breakout. What are we breaking out of? This high, possibly. And then look at what happens. We have a disappointment. This bar was once a huge, massive bull bar, and then it got chopped up and became a bear bar, closing close to its low. This looks like a parabolic wedge. Now, this looks easy, right? As I'm looking at this, I'm like, this is a credible short. So you can go short below this, put your stop up here, and see how you go, right? Back towards the moving average. Whoops, I'm not on form today. So just kind of quickly go through, see first leg down, pull back, second guess test moving average, pull back, and third leg, and now you have the base, right? 1, pull back, 2, pull back, 3. Credible buy above this. What does this look like? A higher low. So this is the first high, higher low, first low, okay? And then we go up even higher. So it's another breakout. But guess what? We get here, we want to test the highs, and then we start to reject. We test the moving average, we test it again, and then we go through it, and then we're now going back up. We break the highs, but we still have a doji, and we come down. Now remember when I was looking at this on the NQ, this high was above this and we've had formed a wedge, right? So we're definitely going down again. So now things are a bit tricky because now this is definitely trading range price action, although it's a higher low and we have two highs, right? So it's a double top and in fact triple top, so it's definitely a trading range. And then we now go down. So I'm thinking maybe we are going down to test this low because maybe it's in a trading range, right? After all, we have 1, 2, 3, 3 highs. And look at what happens. We have a bull bar. Now things are getting even more confusing. I'm thinking, is this a pullback? Maybe it is. I'm thinking maybe we'll go down again. No, we don't. We start going back up. And now things are really weird because I'm thinking, we're now going back to resistance. What happens at this point? We have a tail at the top. Do I wait for more information? Do I buy? Where would my stop be? If I buy, we may come back down, and where do I put my stop here? Like, what is going on? It's confusing. Trading range. Bull bar closing on its high. Okay, that's good for the bulls. However, it's the first pullback, so maybe we want a spike, pullback, and channel. 1, 2, maybe another one coming. Another bull bar closing on its high, and it's at the high of day. Broken this clearly. And it's now getting all confusing, and you're not really sure what you want to do, whether you want to buy, and you're like, see more bars coming in, and now you're like, oh my gosh, what do I do? And the whole day keeps going up, and you feel like the whole thing's left you, right? And then this happens again, and you're like, oh my gosh, do I just buy here? And I remember I actually bought here, but I wasn't even sure what was going to happen because I was scared of a reversal, and so on and so forth. Then had that big bar, and the day just kept on, and you missed the whole big trend, and you're just not sure because this whole thing confused you. You weren't really sure how to deal with this. So I had and this was pretty much the same thing that happened the previous day, right? You've had the experience of this day, seeing how the day just kind of kept going up, and it just seems random. Now, something I do know in the market is nothing is random. Nothing is random. There is some sort of order to this madness, and I could not understand it. And I've always struggled with this small pullback trends. These are small pullback trends. This, like, never really understood it. We used to have, I mean, here's another one where I remember taking a short here, and I got out here and I did not know how to trade this, and got here, I was confused, and somebody would just say, oh, just short, just short. But I was like, yeah, but where do I put my stop? And I just kept scalping it because I just could not figure out what was happening. I know we're breaking out, but I could not, like this formation, nothing made sense. It just looked a bit random. Then coming back, I was like, okay, we have a trading range here, we have a pullback here, maybe we might have a wedge here. I'm not really sure what's going on. It just, like this made more sense. This I can trade because I can see a wedge bottom here, I can see a spike, pullback, a wedged, a channel here, a sell off, which is a spike again, a wedge here. Like I know what's going on here, but when it comes to trends, I'm always confused. So I took the time out to really look back, and something just dawned on me. So what is this? This is how price moves. I came back to the market cycle. Breakout, right? You either have a breakout or a breakdown. And then, actually, you know what, let's forget about that side. Let's just focus on this. You have a breakout, then you have a pullback, and that pullback usually has 3 pushes. Okay, 1, 2, 3. And then you may have a trading range where this comes down, testing this level or testing this level, goes back up, right, comes back down, and sometimes you now have the whole thing starting again. So if we now, let's actually use some nice colors here. So this is resistance, this is resistance, let's use green for support and support. Okay, and then what can now happen? Use blue for this could go this way or this could go this way. And I'm going to label these things. So this is the breakout phase, this is the channel phase, we just say CH, and this is the trading range phase, TR. Okay, and then we now have a breakout again and another breakout here. Okay, this is how price moves all the time. Let's do it in the opposite direction. For the bear case, we have that, and we have a pullback, 1, 2, 3, and then you have your trading range, and then it carries on again like that or like that, in which case you have a bear breakout. Okay, we'll put our nice colors again. So we have resistance here, and then we have supports. Shit, come on, draw. straight lines. Because I'm using a mouse, I wish I had my tablet. Okay, and then we have, okay, and if I now just label this again, so we have here breakout, channel, trading range. Yeah, and then we have a breakout here again, and another breakout. So now we understand this. Now we look at this. We have to look at the market from this perspective. This is all the market is doing all the time, on every time frame. Spike, pullback, channel. If you look at it this way, you have a spike, pullback, channel, and then it goes into a trading range. So, and then if we decide we can go back to say maybe the 1 hour chart. In fact, look at this: spike, pullback, channel. So it's a trading range here, going back up, sort of thing. Here is the bear case: spike, pullback, channel 1, 2, possibly 3, probably going sideways, testing this area. So that's literally what's happening here, right? And then again, this is what's happening here. Remember, market cycle. So that's all the market does on every single time frame. It's always doing that. Here we have a spike, pullback. You can see we had probably had the first pullback was somewhere here, and then it just kind of went sideways, and then we now have the breakout, which literally is this down, this formation. So now we know that, right? And we've always known that whenever we're trading. So how then does that relate to the day? How do we make those decisions throughout the entire day? You know, you have the spike, have everything, and then from there I decided to go into NinjaTrader and break everything down into the different sections. And at that point, it just dawned on me that if I see this, I should expect this and this. Remember the market cycle, always from green to yellow to blue. Then it goes to green to yellow to blue. So now you know what to do. When this high is broken, this is your stop, this is the breakout. You just keep buying. Then you have the 3 pushes here. And then it goes sideways. It gets confusing, right? I mean, you have 3 pushes down here, and then it's kind of gone sideways, and then you have the breakout again, and so on and so forth. We actually had a breakout here, which is not shown on this chart. Maybe I can show it. Actually, I'll show it on this chart. Here we go. That's the breakout bar. It happened in the extended hours. So this is the day session, and this was the breakout, pullback 1, 2, and 3. So one needs to be very aware of what's going on. So I decided to do that here as well. I thought, obviously I knew this was not a breakout because of the way you have an inside bar. You know it's not a breakout here. This is the channel phase, and this is the pullback, and it's turned it into a trading range here at this point, and this is the support here. So this whole thing is a trading range, and here's the next breakout. This is now the 3 pushes up. This is now the trading range converts into a trading range. Breakout, 3 pushes up again, trading range, breakout. But guess what? This is a bigger 3 pushes up pattern. So you have a breakout, 1, 2, 3, and it comes down, forms maybe the next day this trading range, next breakout, and in fact that 3 pushes up on, if you pull back the whole entire chart, this could be the spike. And you have 1, maybe 2, and 3, and therefore you know how you can trade it, and you know where you're buying because you know where your stops are. You know what the market is doing. When you see this, you know it's a leg in a trading range, and now I understand what that means. I've always heard, oh, it's a leg in a trading range, but never fully got it, and now I understand how you can trade this. I decided to take the liberty of doing this here again. We had a breakout in the ETH here. So if I'm just gonna roll this on a different screen and then bring this up. Here we go. So this is that chart, and this was the breakout. Maybe it was 1 bar was a breakout, first pullback, and then you have 1 pullback, 2 pullback, 3, And what then now happens is that now turns, this now is a leg in a trading range because you're having pullbacks, and this is now the trading range. So including the yellow has now become the trading range, and then you now have a breakout again in the opposite direction. This is the wedge for me, pullback, and maybe this, you can call this a pullback if you want, and then you now have a breakout in the opposite direction, and so on and so forth, and it goes on from there. Let me see, I actually did some other ones. I decided to go back. This is just, again, a trading range here. This is actually a trading range. Well, it's a channel because you have lower highs, and then it turns into a trading range. Then you have a breakout in this direction. I really should have changed this into a breakout, actually. Oh yeah, no, it doesn't matter. And then you have the, yeah, I should do that. I should do that. This is the trading range now. In fact, while we are doing that, I should, whoops, Command C, Command V, because it is technically, I mean, it is a trading range, but this is the breakout phase, and then this is the channel phase. If we just put this here, have this here like so, and so, and I always like to put, because you have your first pullback, second pullback, and third, and then the same thing is happening here. This is now the trading range for this thing. You can call it a breakout if you want. This is a channel, this is a pullback, but then again, so many things here. This is technically the trading range anyway, but this itself sometimes happens. And then look at this nice bear trend, a breakout here, which was actually a test of a massive moving average, and it's actually within a channel, as you can see, a broad channel. A breakout here, pullback, so it goes into this phase 3 and then turns into a trading range here, which is actually, the range actually is a lot. I mean, I could put this here. I was going to say this is the trading range, but I think, I mean, I'll put it here for now, but really this is the trading range when you think about it, although it never tested that low, so I would leave it just here. All right, so the trading range here, and then we have another breakout, 3 pushes down, nice trading range here, which is usually the pause in the day. Then we have a breakout. I didn't actually put the green in here. I should actually do that now. And then it's a very small breakout, and then you now have 3 pushes, trading range, breakout again. And so how is that useful? Well, it's useful from the perspective of, you know what the market is doing, and therefore you know, 1, where to place your stop, 2, where to buy or sell, and what to expect next. So for instance, you see this, you could sell for whatever reason here, place your stop there. You see this pullback, and then you see this, you can just hold, or you could even sell here, you know exactly, you may get another high, but you know you're going to get a trading range afterwards. So you're going to get lots of tails, wicks, and stuff like that. At this point, a little reversal, you know the target is probably going to be down here. Usually that's the target, but because the moving average is here, it's probably going to fail. It's a very tight channel, therefore any reversal is going to be minor. In fact, you can see the wedge 1, 2, 3, or if you want you can say 1, 2, 3, and then this is the bar you can use as your signal bar to go short. And that's the point. It's now like, say for instance you're over here, you then have to ask the question, what is the market doing? We're in a trading range because we've just come from this phase, so now you know how to trade it. You're waiting for a breakout in either direction, and then you can now take your trades, or you could decide to scalp in this trading range. There's a high probability you're going south than north because of how tight this channel is and how many bars you have here. Do you have under 20 bars? You have just about 30 something bars here, or under 30 actually. 62 minus 36, so it's about 28 bars here. Did I say, no, 26 bars here. No, yeah, about 26 bars here. So yeah, so the probability reduces the more bars you have in here, and then you have the breakout here, so you're going even lower. You know you can just sell the close of this bar, put your stop here at the breakout, and essentially it just makes it so much easier to trade what you're trading because you know what the market's doing. Here you have, this is actually interesting. Now we even look at this one. Here we have a nice spike, a big spike, a pullback. So this could now be going into the channel phase, right? So we now have a pullback. We have 3 pushes down. We could buy the high of this bar because we know one thing: we're coming close to the moving average. I'm actually comfortable buying this because we're far from moving average. Not really the place where most bulls want to buy because the risk is high. We could reverse, but it's a credible buy at the start, especially after a big spike. And then also there's you have a top of a trading range, so at least you could see what happens there. I remember this day was a very difficult day for me because I bought this high, but I had no idea what I was doing because I was like, okay, we're probably in a bull trend, buy here, but if you're buying here, your stop is here. And it came down and I just didn't know how, and I stopped myself out. But this is a good buy close to, you put your stop here. This is a breakout, and then you're going pull back, 3 pushes, 1, 2, 3. This now becomes the trading range. Yeah, that now becomes the trading. I'm just going to mark that 1, 2, 3. So now this is now your trading range. So let's actually mark that now, since I wasn't actually going to do this, but I might as well just do it now. All right, there to there, and then to there, and then did I just do that? Should I just, oh no, didn't even notice what I was doing. Let's put this back here, there, and here. And then we want to take a copy of this because we know this is the channel phase, and then prior to that is the breakout. And we can just put it down here, right? So here we're in the breakout is a channel, so technically this is a bigger channel, but this is the breakout, this is the channel phase, this is the trading range phase. Another breakout channel, maybe this is a pullback here, 1, 2, 3, trading range, another breakout, and then it goes sideways. This now becomes a bigger trading range because we're going down, we're now having new legs. I'm just going to copy this here. I can't be bothered to do the other ones right now, but you know what it means. So we go down 1, 2, 3. So you can decide if you want to, you can mark your levels so you know this is the low, and the price is now between this area and this area. This is the range. This is the breakout here, coming out here. 1, 2, 3, like that, and then going back into another trading range here, and that's how you trade it. It just seems so straightforward. Of course, at the time you probably see this and you're like, okay, fine, we're coming to the moving average. And then now how do you decide whether we're going lower or higher? This could probably go higher and the trading range could be here. That is fine, but we have to see the follow through for the bulls. This is not good for the bulls. If you're thinking we're going to reject like we have done previously, and you now see that we have a big bear bar, bad follow through from the bulls, and then even not so great follow through here. You have a doji still not taking this high out probably, and then you now have another big massive bear bar, so it's like a double top at this point. You probably want to be getting out if you're in your longs. You can see it's a lower high, boom, breaking through the moving average, so you now have 3 legs down. This is not really a good idea to be trading in the middle of a range. If you are going to be buying, I don't think bulls should be buying this high or buying this high, especially when you see a triangle forming. You have a bear breakout. If you're going to be buying, you want to wait for a bull breakout. And I think that's the point. You want to wait for a breakout. In a trading range, you don't want to be buying high. That's the thing. Okay, that's it. You don't want to be buying high in a trading range. You want to be buying low. You want to be selling high. So you could say, well, should I just sell this high? Well, you're on a bull trend, so you don't know. Until you have a credible bear breakout, I probably will not be selling. Anyway, test this moving average here, which is the 15-minute moving average. 3 legs down, so it's a very good buy over here. This is a high 3. It's a high 2 here, high 3. Definitely a good buy. 1, pull back, 2. Hang on. 1, pull back, 2, pull back, 3. Right? So at this point, what's going to happen? We could probably go down or we could go up because this is a wedge top, but actually it's filled and it's going higher. Yeah, and then you now have a breakout, a wedge here again, and you're now back in your thingy phase, and then back down here. So the trading range is now even gone bigger. I remember one this day, I found it difficult to trade this day because I just did not understand what was going on. Here we now have a bear breakout. We have a nice channel, one, 2, 3 possibly. And this in itself is a trading range of sorts, but this is a bear breakout. This is a pullback, your pullback, like, the pullbacks. And then you now have another leg down, another pullback here, another leg down. So that's 3 legs down. And that is a credible reversal. It's now converting into a trading range. This is your new low of the day. 1 pullback, 2, you can see the trading range is tested this level, and what ends up happening is you have a bull breakout, comes all the way up here, and then now you have consolidation here, if you want to call it, bear breakout. So still in the bigger massive trading range all the way from here to here, testing this low possibly to here. In fact, let's have a look. Oh dear, I didn't want to do that. Oh yes, yeah, here we go. So we're testing, there we go. So this is the range, testing this low here up until this point. It breaks out of the range here. In fact, this is the low of the same range as well. It's just a test of this low, pulls back, and then it comes back down, and then we carry on a bear trend. But prior to that, you can see we had 3 legs down, 1, 2, and 3, and that yielded, this itself is a parabolic wedge. It was a bear trend or bear leg in a trading range. So you had a bear breakout, a pullback, 1, 2, 3. So it's the channel phase. But even within that, you had a bear breakout here, 1, pullback, 2, and then you can even say this itself is a breakout. There's another breakout, 1, 2, 3, and therefore you could buy this because you are possibly coming to test this level again, just a trading range, or possibly this level. As you can see, we do that, and then we break out again, testing the low, come back up 50%, breakout, breakout. And so that's it. I don't know what else to say again. I just now understand how this works. And I mean, I've always known that, but I've never really fully understood how to trade it. And now using this method, I'm able to ask the question, what is the market doing? Where is it within the cycle? What is possible to happen after what has happened? All right, that was it. And that's really, truly the recap that I wanted to share. And hopefully it is helpful to other traders.